Welcome back. You're tuned into Bazaar Morning Call. Now, we've listed all the stocks down, but, let's get into some more fundamental analysis. And we have Prakash Diwan who joins us on the show. Hi, Prakash. Good morning. I believe you're in Paris. So hope things are quite pleasant out there, Prakash. Let's discuss a few stocks. Vodafone Idea, they seem to have some good news going. They've concluded a $3.5 billion supply for network upgradation with vendors. Well, the problem is now that technical factor comes into play because those that got in at around 11 rupees could want to get out. What's your view on the stock? It ended sub that 11 rupees. Your take.
Good morning, Nigel. Thank you. It's very clear Vodafone will have to go through this whole process of resurrecting itself from being down in the dumps, because what brought it down was apparently more of a sentimental setback, that you don't have any relief on AGR coming, which means there's this huge looming large outstanding which could hit you. And then, this order was, of course, in the works. There's something that's happened after the AGR ruling has come out. But what it tells you is that they've probably planned for growing at their own pace, which is, of course, much below the market pace. And they will continue to do so and attempt to do so. So if you're willing to give them and be charitable and give them the benefit of doubt that they could kind of resurrect themselves from here in the next year and a half, then probably, it's worth holding on to. But given the fact that there's this uncertainty on financials, which the balance sheet strength, which is still a bit doubtful, I don't think people are going to put too much of confidence into it. And as a matter of disclosure, I also have an exposure to this name. I'm quite positive on it from the time the FPO came, because of the kind of opportunity that exists for their presence as the number 3, number 4 player, whatever. But I would believe you'll have to really be very patient with it now, Nigel. There's nothing which is going to change in a hurry. In fact, it could keep on slipping in case things go adverse in terms of news flow. But I would believe if you're patient enough, you'll probably have a risk-reward, very good risk-reward ratio. If you're, let's say, looking at 2 years or 2.5, 3 years from now, there's nothing which is going to happen in this financial year or even probably middle of FY26. So just be patient, and then that's not something which a lot of people these days like to do. So only then you'll probably make some money.
Okay, got it. Be patient. That's the advice. Good advice. Prakash, great to have you on, but I can't help but wonder, how is it that you're joining us and you're working while in Paris? Is it a holiday or is it a work trip?
No, this is more like a work trip, but, okay. It was Monday morning. It's too early here, that's all. So I'm probably awake earlier than most of the Parisians, but yeah, it's all work.
That's true. It's good to know, good to know. Okay, Prakash, we were just discussing this, overnight development, big news coming in on this semiconductor fabrication unit that's going to come up in UP this time, along with, US tech help. And it's a big one, right? So the question is that there are several facilities already coming up in Gujarat. We all know that. And there are listed players that are in the fray. There's Keynes, there is obviously CG Power that's setting up some of these units. And then, of course, there are the Tatas in the, unlisted realm. The question is, what do you make of this news announcement? It's a big one. But in terms of trickle-down effect and finding listed beneficiaries, which are the stocks to look at?
So, Shubhi, it's going to be a bit too early to, blow out the bugle on, victory in terms of, the semicon industry coming of age in India. It's just the start. It's just the promise of a lot of things that could happen. And to be honest, most of the players would just want to kind of go along. Regulations will evolve. The ecosystem will emerge. So there's lots that can happen eventually to make this industry and sector very robust. But right now, you'll have to go with people, with businesses which have the right pedigree. So, for instance, Keynes, it's already, in the last 6-8 months moved from that 2,400 zone to, wherever it is today, on the back of this promise. So there will be a lot of these companies. What I am particularly interested in looking at is the ecosystem development, and which will throw up a lot of opportunities for low-tech players also to participate. And we have a lot of businesses in the listed space that are kind of, tweaking their strategies, tweaking their business segments to kind of cater to that. So I mentioned a name like D-Link. I don't know whether we discussed this sometime back. D-Link is a sleepy old company into very basic stuff on connectivity and, networking solutions, but then they're kind of gearing themselves up to get into data centers and things like that. And you will eventually have businesses that will emerge. It's too early to really kind of allocate significant amount of capital to it. And as you rightly said, some of the names have already run up so much. So I really won't put any additional money at work out there. But eventually, you will see this emerge as a very promising space. So keep watching. But some of the big names have made some commitments to the business, to the sector, but nothing very significant yet to move the needle from an allocation perspective.
Prakash, banks, I mean, if you can quickly weigh in, what's your sense? I mean, that's the one area, right? Banks and IT basically are the two areas where FIs have been in a big way. And those are the two sectors which have done very poorly. But banks specifically, what do you like there? And would you be willing to take a bet here if you did not already own names?
So, Prashant, I think, the FI comeback is potentially going to be led by allocations towards the financials. And out of that, if you look at the private sector banks, I think ICICI Bank still stands out. We spoke about this about 4 months back where, it was probably the best one within the languishing names. And I'll tell you why. It's as simple. Their deposit franchise is actually getting stronger by the day, while Axis and HDFC have their own, issues related to integration and all of that plaguing them. And the other thing is that the kind of lending growth that will be difficult to come by is something where ICICI has a very strong presence in most pockets. So my sense is that, it will probably have a more balanced growth and nothing which will be very skewed. And from that perspective, FIs will also look at what is it going forward a year down the line that these banks will look like. And I think ICICI Bank gives you that comfort. It may not give you a great upside, Prashant, but yeah, it gives you that great comfort of being more resilient within the larger private sector banks. And then you can have some financials adding to the spark. Housing finance companies continue to look very good. So I would really look at some of the names there. Of course, good choice, but take a look at Indiabulls Housing Finance, which is now of course called Samman Housing. That could come up with something which is more like a turnaround or a special situation. So yeah, you could balance this out: a boring bank and a housing finance company that's under repair. So, I'm very positive on the banks for sure.
Okay. Got it. Prakash, just, word on PSUs, because there's been an interesting shakeout. Most of these stocks are down 20-25% from the top. But on Friday, as the market sentiment revived, we saw the shipbuilders back in fashion. I mean, this morning there's news on BHAL. They've won another large order. So if you were to dip in and pick a PSU, first of all, would you do it? Would you buy a PSU on the dip? And if yes, then which one?
No, so I wouldn't. I think the PSU shakeout is just begun. It still has some legs on the way down. You'll probably see some of the sleepy names come to the fore. So let's say Orissa Mining, OMDC, which could look up. So I'm talking about PSUs which are not frontline. If you were to allocate some money, it would be to that, because the government's focus would probably be to now revive these and go full steam ahead. But the BHELs and the railway stocks and a lot of the defense names, they'll probably go through their own share of, finding price equilibrium on the lower side. I really won't want to look at that, because consumption and some of the other themes are revving up much better in a more, resilient and a visible way. So I would stay away from the PSUs for the time.
Okay. All right. Prakash, thanks for that. Well, we